What's going on, everyone? It's K-Dub from Crypto Zombie here with more news and headlines from DC Forecasts. So if we have a look at what's going on today, we see that the market is sitting roughly around a $200 billion market cap. We have Bitcoin sitting around $6,437, Bitcoin Cash $434, and Ethereum holding nice and steady above $200 at around $209. So if we dive in and have a look at what's going on today, the biggest news is that the New York Attorney General Office has recently published a new report, particularly aiming it towards the latest crypto news in which crypto exchanges are in the spotlight. According to the report, the exchanges are vulnerable to manipulation, conflicts of interest, as well as other consumer risks. Well, this is something we've heard before, haven't we? So aside from this, the reports come as an addition to the Virtual Markets Integrity Initiative, which was launched in April when the Attorney General sent letters to 13 crypto exchanges and requested information on their platforms, internal controls, and other key issues. So if we have a look over here, this is the actual report. It's 42 pages long. It's quite lengthy. You can see they go into much detail. They reference different exchanges. For example, over here, they have HBus, Gemini, Poloniex, Coinbase, Tidex, etc. So very, very involved as far as the reports are concerned. But essentially, the study found that right now, the absence of accepted methods of auditing the virtual assets results in a lack of consistent and transparent approach to independently auditing the digital currency traded on exchanges. So it goes to explain automated trading activities could also allow a single trader or group of traders to command multiple accounts simultaneously to obscure coordinated trading in order to manipulate prices. We've definitely seen this happen before with the volume. So with this, the report also touches the point that several of the investigated platforms trade their own account in volumes that make up significant portion of the total trading. It further reads, though some virtual currency platforms have taken steps to police the fairness of their platforms and safeguard the integrity of their exchange, others have not. Platforms lack robust real-time and historical market surveillance capabilities like those found in traditional trading venues to identify and stop suspicious trading patterns. Now, this also brings us to some other news. So, with this coming out, the Attorney General has referred specifically to Kraken, Binance, and Gate.io to the Department of Finance Services. So Barbara Underwood reported in a Virtual Markets Integrity Initiative report, which is the one we just spoke about, that all three exchanges potentially violated the New York's virtual currency regulations. In the report, concerns are expressed about the operations of these exchange platforms regarding market surveillance protocols, security, and consumer protection. Earlier this year, a questionnaire was handed out to 13 of these crypto exchanges. They asked the participants to answer questions regarding better transparency into their operations. However, Binance and Gate.io declined to participate, saying that they don't allow trading from New York. Well, I'm from New York, and I could say that things are a little different on my end. However, not looking too good for some of these guys, but then again, that's why they're deciding to take things to Malta, move things to Liechtenstein, right? If they're not going to work with them here, they're just going to take them somewhere else. So, all right, moving on. Now let's talk about some more. We got some little FUD coming out from the finance minister of Germany, Olaf Scholz. He claims that cryptocurrencies aren't eligible to replace traditional fiat currencies. Just the kind of news we would expect from a dinosaur like Olaf. He says, I would doubt today whether it has a perspective as a currency model. He also made a comparison between the cryptocurrencies and the tulip fever bubble that happened in the Netherlands back in the 17th century. It said that it has much bigger stake in the game and that the danger of such a tulip inflation is far greater. Well, let's just break this down really quick. So tulip bulbs, right, make flowers, which then you can replant those bulbs and continue to grow more flowers and then get more bulbs. So essentially, tulips are a horrible, horrible comparison because there's literally only 21 million Bitcoin ever in the world. You can't mint them. It's estimated that around 4 billion of them are lost forever. So once again, somebody just making more allegations on things they don't understand. But according to Scholz, regulators should be over their heads and work trying to regulate and observe cryptocurrencies since they are perfect tools for money laundering and financing terrorism. Although most of us would argue that the dollar is a lot better than Bitcoin, considering Bitcoin is on a distributed ledger. But that's none of my business. Moving on to the next story of the day. So we have some good news. Now this comes from Eric Voorhees. He's the CEO of Shapeshift. If you guys have ever used that, basically it's a really easy tool for just converting one crypto into another without having to go through all of the hassle. So essentially he says, Bear markets are for builders, the calm, the quiet, the disillusionment. While the fickle and fair weather peer around with nervous insecurity, the builders become the market's foundation, preparing the mortar and stone of tomorrow's towers. Just like many analysts, Voorhees thinks that Bitcoin's 5 major corrections, which occurred over the past 8 years, so we had 2010, 2012, 2014, 2016, and currently the one that we're experiencing right now, were all important in terms of building up the price of the largest cryptocurrency by market cap. That said, the 67% drop of Bitcoin this year is actually the smallest correction in terms of percentage loss since 2010. So efforts of new players such as Bakkt, Coinbase, BitGo, Starbucks, Microsoft, Goldman Sachs, Morgan Stanley, and Citigroup are all looking quite bright for the future of crypto. So that being said, I want to say thank you again for joining me on another news and headlines brought to you by DC Forecast. And until next time, stay crypto and peace out.